Let's take a look at our Nigerian market update. The NSE All-Share Index gained 1.26% to close at 33,447.12 points. Now, that's on the back of gains recorded in the share price of Dangote Cement, which gained 5 naira. Also gains seen in Nestle, Guinness, Red Start. The losers were FBN Holdings, Unilever, while UBA, FCMB, UBN all dropped about 30 kobo each. Now, let's take a look at recent policies around the Nigerian banking sector, and I am joined by Olumide Akindele. He's the head propositions and liability at Diamond Bank. Thanks for joining us today, Olumide. Let's move straight into our discussion. The NSC launched an alternative securities market for small and medium-scale businesses to raise capital from the public. Now, how confident are you that this could help to bridge the SME funding gap?
Very good question. I think a lot will depend on what the regulators, incentives the regulators put towards that alternative market. Currently, we see in the main market where we've not seen a huge amount of activity in that area. There's still a lot of visibility and work to be done by the regulators to encourage SMEs in that space. I think what will probably plan out or pay out is where government have to actually incentivize, the regulators have to incentivize that space to allow a lot of investment in that area. So in a nutshell, it's just to wait and see how that will develop as we go along.
Now, banks have increased their appetite for lending to the private sector. For example, last week, MTN Nigeria agreed to a $3 billion loan to expand its network. We also have Dangote Group in talks to raise $3.5 billion. Now, these are, of course, big deals related to large companies. However, what type of growth are we seeing in SME lending?
Very good, all around very good news. I think what has happened is that, the banks are gradually going into the space on the back of fantastic 2012 results. What we will see as we go along is more pressure on the banks to actually lend in that space. I mean, as you know, the main inhibitive in driving lending there is infrastructure and power. Most banks are not comfortable when it comes to lending to that space because most businesses depend on the basic infrastructure that's required to drive the business. But I think what has happened over the last year, where we've seen banks grow their deposit base tremendously, is they need to invest this money. So I think they'll all go into the MSME space with their eyes wide open and look for areas where they can see returns, justifiable returns in that space.
Now, access to credit, of course, as we mentioned, is still a major challenge in Nigeria, especially, as we say, lending to SMEs. But could the recent spike in treasury bill yields perhaps impact lending to SMEs?
In the short time, no, but in the long term, yes. Because what we'll see, as you know, if inflation, the treasury bills are driven by the inflation rates, and if they start to come down, then the reduction in the margins become noticeable. But because I said earlier, like I said earlier on, that most banks have huge war chests, I would like to say, we will see over long-term interest rates coming down and more attention being paid to the SMEs because it will still be profitable for banks to lend in that area. So we expect to see more over a long time. I'm not sure, it's not a major area of concern for most banks at the moment.
I believe you also mentioned earlier power reforms. There are reports of improvement in supply to some parts of the country. Is this having any visible impact on SME businesses?
Well, it's too early to tell. We hear, or we notice that some parts of the country are beginning to have, power and infrastructure, but I don't think it's got to the stage where it has a major impact in terms of that. There's still a lot of grounds to cover in providing that infrastructure around the country. So I expect there still to be a long way to go in terms of getting to the comfortable levels where we can say, MSME business are supported.
Of course, we know, inflation rate for March, 8.6%. MPC has kept the MPR at 12% for some time now. Now, some say that it is time for a reduction so that we can start to see more lending to SMEs. What's your view?
That's the multi-million-dollar question. You can see the CBN are obviously grappling with, their policies of macro monetary policies, using inflation and, trying to actually maintain the the exchange rates. My own personal view is I expect to see, inflation still stay single digits actually till the end of 2013, and I don't see how that will impactly change what will happen for the end of the year. I think things will, be very the same. I expect something very huge to happen to actually CBN change the NPR down going forward.
Now let's talk a bit about the central bank's financial inclusion strategy. What's the update on that?
Well, the update on that is, as you know, as you might well know, CBN introduced new bankers' tariff charges guide to bankers about 2-3 weeks ago, and essentially a policy to guide banks in terms of charges. Now, part of the strategy was to ensure that consumers have choice. Consumers know the price of what they pay for banking services, which was part of one of the mandates that CBN wanted to actually push in their financial inclusion strategy. So that's been introduced, and most banks are already complying and devising strategies in terms of how they will adopt to that. The other thing that we're eagerly expecting from the CM is the framework for licensing for the agent banking. Hopefully that will come out very shortly, and that will also, change the way we bank in terms of for the underserved or underbanked. So there's a lot of activity that where we would expect from CBN in the first half of the year that will change the landscape of the country.
Now, of course, there's been a lot of talk about CBN's gradual phasing of COT and ATM charges. So are you starting to see any impact at all already?
Yes, I mean the impact will be, it will be immediate. So all bankers will have to comply immediately with CBN guide in terms of banking. So you would have probably heard about COT coming down from 5 naira to 3 naira, and that's an immediate impact. Also, there's a lot of information in the bankers' guide that has dictated how we charge and how we price for products and services on the bank. So there is already an immediate impact. Now, the challenge will be how we, the banks, will react very quickly to how you can still maintain a good, decent level of service and still make profits for shareholders. So that will be the big challenge over the next 6 months, where we begin to see the strategies that the banks will put in place to reduce, income loss.
Olumide, let's talk a bit about some of your new retail banking products that are coming into the market now. Mobile banking being very new to the market. How are customers responding to this new development?
Mobile banking has actually been quite around, for the last 2-3 years, and most banks do have a mobile banking product, and I think it's one of the areas where customers are beginning to it's like new technology. Customers are beginning to gradually, have the adoption. We still have a long way to go because there's still issues surrounding infrastructure that is supported by the telcos, for example. That still has to be, the service you get for that still has to be sorted in a long way. And there's also the issue of education and literacy about these products. And I think we're in the right trajectory, and I expect that we will see a lot more impact use of mobile banking as we go forward in the year.
But so far, what are some of the gains that you've seen from this strategy?
Well, the immediate gain you see is an awareness. I think that's the first thing I can say. There's been an awareness of mobile banking. But like I said, it's still very early to see the massive impact or change that we, the industry, expect to see in terms of visualizing mobile banking. It's still very early in the days, but there's confidence in the market that that will change the way we bank, going forward.